1A of the income section is for entering annual gross income from employment. Calling your attention to the larger gray box by line 1A, you'll notice that there are X's in the check boxes captioned, "Use this annual gross income." These boxes are checked by default because most often you'll have last year's W-2 or other documentation evidencing a party's annual gross income, and you'll enter the income under the checkbox. That amount you enter then appears as the line 1A amount under the gray box. By the way, default values for all the form fields are stored in the default file. The default file is the same as any other client file you might create, with the exception that Roxy uses the default file as a seed for creating new files, as happens when you first start the program up or select New from the File menu. Now, in case you missed it, while I was talking there, I went to the File menu and I clicked on Open to bring up this Open dialog. By using the Open command on the File menu, you can open the default file, as I am here. You'll see that it looks like any ordinary blank file, but there are a number of items that have been preset. For the sole residential shared parenting worksheet, the number of children is set to 1 automatically. Of course, you may work on a case that has more than one child, and so you can enter any number you want on that field simply by tabbing to it. But for convenience, we've preset it to 1. Similarly, we've set the split parenting worksheet to 2 children. Another field or set of fields that have been set by default are the checkboxes on line 1A that I mentioned a moment ago. If you prefer to use the second set of checkboxes in that gray box, you can clear the Use This Annual Gross Income checkboxes and check the ones below. Then save the changes by either clicking on the Save button on the toolbar underneath the menu bar, using the File menu's Save command, or by using Control-S on your keyboard. After that, every time you start Roxy or use the New command, the second set of checkboxes on line 1A would be checked. The other important thing to remember about the default file is that after you make your changes and use the Save command, get the heck out of the file, because everything you do in the default file becomes permanent. Therefore, you'll want to unload the default file so you don't accidentally save information that changes from file to file. The best way to get out of the default file is to use the New command after you have saved your changes. That does 2 things. It unloads the default file, and it lets you see the newly seeded blank file to make sure that your changes appear the way you want them to. In fact, I just did that by going to the File menu and selecting New a moment ago. What I end up with is a copy of the default file with no name yet assigned to it. One of the other commonly set defaults is on page 2 on line 8, where we enter the current year's federal tax exemption, which changes from year to year. Again, to do that, I'd open the default file, navigate to line 8, I'd enter the new dependency exemptions, save my changes, and finally use the New command. Every file that I start after that will have the new values on line 8. You see that the value used in this file is the 2010 dependency exemption, which is $3,650. One aspect of this that you want to be aware of is that if you open an old file with a different exemption, it will keep the exemption that was in effect at the time you created and saved the file. That way, you can be sure when you open an old file, the child support amount will not have changed simply because the federal exemption changed. Now, of course, you can update and change the federal exemption in that file, but that's something you'll need to do affirmatively. It will not happen automatically. In summary, the fields that you'll give your attention to in the default file are the fields that do not change from file to file. There aren't that many, but these that I've mentioned are pretty good candidates. The processing charge of 2% is another field that doesn't change from file to file, and therefore we set it at 2% in the default file. Now I'm going to return to page 1 where we left off, and I'll do that by using the page selector buttons on the toolbar under the menu bar near the top of the screen. They allow you to move from page to page without returning to the main window or needing to use the display menu's individual page display commands. I hope you noticed that when I hovered my mouse cursor over a page selector button, a hint appeared showing what questions were on that page. I also hope I wasn't going too fast and that you noticed that I went to the File menu's History list and reopened the file we were in called Instructional Video. The History list is at the bottom of the File drop-down menu, and it contains a list of the last couple files you've been working on. It's simply a shortcut for opening a recently used file. I'm going to use the first set of fields and enter $45,000 in the father's column. Tabbing twice to the mother's column, I'm going to give mom the same amount of gross annual income from employment, $45,000. Scrolling down, what you'll see has happened is that because the first set of checkboxes is being used, the amounts we placed on those two fields is being transferred to line 1A below the gray box. Note in this context that you aren't required to use the same checkbox for both parents. You can use the Use This Amount checkbox for father, for example, and then estimate the mother's from a year-to-date pay stub or vice versa. You can't just go down here where I'm circling my mouse and enter the annual gross income from employment. You must use one of the two methods in the gray box, and that brings us to the second set of checkboxes on line 1A. These checkboxes and their related fields are for estimating annual gross income from employment using a year-to-date information on a party's pay stub, for example. I'll clear the upper field so we can illustrate the use of the income annualizer. It's not necessary for me to clear the dollar amount fields. All I need to do is uncheck the checkboxes like I just did there, and the information in the dollar amount boxes will be ignored. We'll begin by checking the father's checkbox, then we'll tab down once to get to the date field. The date field has a pop-up calendar that you can use to select the date that's on the father's pay stub. We'll select February 5th, 2011. In fact, you'll notice that when I clicked on the drop-down, the calendar was automatically set to today's date, February 5th, 2011, so I'll just leave it like that. Next, tab to the amount field where we'll enter the year-to-date income. I'll use $4,500, which should yield an annual amount relatively close to what we had previously entered. You can see how easy it is to change information or make corrections. If you're on that field, you just backspace to erase it and then type in the correct amount. Participation code 3, V Victor P Papa C Charlie 004. Finally, tab to the pay frequency field where we let Roxy know how often Dad gets paid. We'll enter B for bi-weekly. With these 3 bits of information, the annual gross income can be estimated, and that amount is placed on line 1A beneath the gray box. In this case, the estimated income is $45,500. One thing to be aware of is that the later in the year that you perform the estimate, the more accurate it will be. Consequently, you probably won't want to use this function in January unless the party is salaried or otherwise makes the exact same amount each pay period. A salesperson, for example, whose periodic pay may vary considerably, would be a lousy candidate for using the estimator early in the year. For purposes of this example, I'm going to remove this estimated information and return to the Use This Income fields and enter $45,000 for each party. Well, I didn't quite say that correctly. I don't need to re-enter $45,000 in the upper dollar amount fields. I never erased those amounts in the first place. All I did was uncheck the boxes, and so all I have to do now is recheck the boxes. And that brings me to my next point. Notice that you can leave the date in the fields in case you want to return to it or reactivate it for any reason. Whether it's used is based on whether you check the box or not. Therefore, it's not necessary for me to clear all of the annualizer fields, only the checkbox. I don't think there's much more you'll need to know about line 1A. I've rechecked those boxes, as I mentioned a moment ago, and so we'll leave the line 1A gray box by tabbing down and scrolling our way to the next line number. Line 1B is used for considering overtime, bonuses, and commissions. The way it works is you enter the last 3 years and Roxy takes the lesser of the 3-year average or the last calendar year, which is marked year 1. It should be obvious why you can't tab to the average field, because that field is strictly a mathematical average of the 3 fields above it. There should never be any reason to go there. Roxy will do the number crunching automatically. Now you'll notice that the line 1B field in the mother and father columns to the far right have aqua-colored backgrounds. That signifies, as we mentioned in an earlier section, that the fields are overridable. Now you may ask, if line 1B is the lesser of the 3-year average or the last year, why is it overridable? Well, the answer is, the thing that is sometimes overlooked with respect to 1B is the last sentence, where it says, if there is a reasonable expectation that the annual income from overtime commissions or bonuses will be less than the lesser of the average or year 1, then use the reasonably expected amount. It's interesting to note the part where the statute reads, will be less than. The implication there is that the entry of a reasonably expected amount can only be used to reduce the amount that would otherwise be entered on line 1B and not to increase it. That lesser amount is entered by way of overriding the line 1B amount. We talked about overriding earlier. You'll remember that you can cursor over to the options menu and select override and then type in any dollar amount you want. Now I'm not going to do that. Instead, I'll make some entries in the fields over here to the left. Let's take an example where 3 years ago Dad had $15,000 in annual bonuses. I suppose I'm a little late mentioning it, but these dollar fields are masked so that you can't enter dollar signs or commas, only numbers and decimal points. 2 years ago he had $12,000. And in the last calendar year, he had $6,000. Tabbing took me to the mother's column, but we won't make any entries there. If we scroll down to look at the average, we see that Roxy has calculated an average of $11,000. Now let's say that Dad has been notified by his employer that there will be no overtime or bonuses in the upcoming year. If we scroll down even further, we can see that Roxy has placed $6,000 on line 1B, which is the lesser of the last year, $6,000, or the 3-year average, $11,000. So because Dad had a reasonable expectation of no overtime or bonuses in the upcoming year, I can override the amount on line 1B. I'll do that by clicking on the option menu and selecting the override command. You can also use the Control-V key combination from your keyboard. Either way, you can enter 0 on line 1B. You can see that once you make the override, the number you entered will appear in red as a reminder that this is not a field that is being completed by Roxy. It's also worth noting that if you want to cancel an override that you've made, you merely tab back to that field, go to the options menu, and select the Cancel Override item, which is right underneath the override item. This is as good a time as any to state the save rule, which is 3 words, early and often. So you may want to use the File menu Save command to save your changes, or the Save As command if you haven't given the file a name yet. In this instance, I already gave the file a name. I called it Instructional Video, and I saved it. So all I really need to do is click on the Save button, or use the File menu's Save command, or use the Control-S key combination from the keyboard. Now, line 2 can be the source of much argument in the typical case where the self-employed obligor attempts to minimize income and maximize expenses. This is often the reason that accountants are used as expert witnesses to verify that all the receipts are declared as income and all the business expenses are legitimate, ordinary, and necessary ones. In the context of the child support worksheets, however, what's happening on line 2 is pretty straightforward. Ordinary business expenses on line 2B are being subtracted from gross receipts on line 2A. Line 2C is 5.6% of the difference between lines 2A and 2B. Knowing that there may be exceptions to the normal handling of this calculation, you'll notice that like line 1B, the background to the text input box is aqua-colored, meaning the field is overridable. Lastly, line 2D is line 2A minus line 2B minus line 2C. Of course, lines 2C and 2D are straight math, and for that reason, they're handled automatically by Roxy. I accidentally cycled from the last field at the bottom of page 1 up to the top of the page, and this shows you how the fields are tied together in a circle, with the last field on the page being followed in tabbing order by the first field on the page. This is also a perfect opportunity to use Shift Tab to cycle backwards from the first field back to the bottom of the page. By doing this, I'm able to return to the bottom of the page without needing to tab repeatedly to get to the bottom or picking my hands up off the keyboard to use the mouse. I'll put $6,500 on line 2A as the gross receipts and $3,500 on line 2B as the business expenses. You'll notice that as soon as I place an entry on line 2A and then on line 2B, the amount on line 2C updated automatically. When I scroll down, you can see that line 2D is also completed automatically, and therefore I can't even tab to that field. Now, don't overlook the fact that for purposes of doing a quick workup, you can always resort to a party's most recent Form 1040 Schedule C, which contains the needed information. That is, gross receipts and deductible expenses. In our example, the mother has $168 on line 2C, which is $6,500 minus $3,500. That's $3,000. And $168 is 5.6% of that $3,000 amount. Now, line 2D is $2,832, which is $6,500 minus $3,500 minus $168. Now, the income section continues on page 2, and I'll use the page selector button on the toolbar at the top of the screen to get there. Line 3 is for interest and dividends, and that information can be gotten from last calendar year's income tax return, or if that's not representative of the current year's income, from interest or dividend statements received by the party periodically during the current year. Line 4 is for unemployment compensation. Because it may not continue from one year to the next, it's usually best to find out what it will be in the current year rather than relying on prior tax returns like you might safely do with interest and dividends. Line 5 is for income from workers' compensation, disability, and retirement. And everything we said about line 4 applies to line 5. Now, line 6 is for other income, and the unique thing about this line is that it has fields to the left where you must describe the income's source. You'll need to be brief because there's only 2 lines of space. Finally, line 7A is the total income, and that is the total of lines 1 through 6. Line 7B is 5% of line 7A, and it is completed automatically by Roxy. It represents a maximum or a limit over which an obligor cannot be held accountable for payment of health insurance. So it's worth noting that line 7B is never used again in the worksheet calculation. It's just there for informational purposes. Likewise, the gray box below is the annual contributing cost differential. The gray box amount on line 7B is not used anywhere in the Roxy calculation, and therefore you don't need to complete that field. It's more of an informational field to keep track of what the health insurance cost differential is, and we'll be talking about that subject a bit more in just a moment. I should call your attention to the parenthetical which refers to the line 7B help topic. This is a good opportunity to show you how to get to that help topic and any other line-specific help topic quickly. You only need to click on the Help menu and then select Help on Worksheet Line Number, and then a submenu appears listing the different line numbers on which you can get specific help. I'm selecting line 7B, Health Insurance Maximum, and up pops the help topic. Help topics usually contain citations of applicable law, and line 7B is no exception. It quotes the Federal Register, which says that a question exists as to whether line 7B's 5% limit applies to a party's entire cost of obtaining health insurance or only to the part of the cost that represents the difference between a party's individual health coverage and family coverage. The Federal Register provides that the maximum should apply to the difference in cost and therefore should not include the cost of individuals who are not the subjects of the support computation. If you have this information, that is the cost differential, you can enter it in line 7B's gray box. Like 7B, however, it is for informational purposes only and does not affect the outcome of the child support calculation. To give you an idea of how this works, I visited a few insurance company websites and received quotes on policies of health insurance for both individuals and families. I'm not trying to be scientific here, I'm just trying to give an idea of what type of numbers you might expect to see on this line and how often it might come into play. One thing to understand at the outset is that the cost of health insurance is dependent on a lot of factors: your age, your height, your weight, whether you're male or female, whether you're a smoker, prior existing health conditions, your place of residence, which company you're applying to, the type of policy you want, for example, an HMO or PPO, the deductible, the coinsurance, and many other factors all play a part. GoHealthInsurance.com provided over 100 sample premiums. Participate